Have you ever seen so much bullish Bitcoin news? BlackRock's pro-BTC, US president's pro-BTC, company after company is buying Bitcoin. All the stars are lining up, the big money's here, the billionaires are buying, it's all over the place. Even the most adamant haters no longer talk about it going to zero, they have to take the bitter pill of reality. I see your comments though, Lark, why the F is the price not moving? The price is kind of moving a little bit today, but I get your question, I understand, and to be clear, no one wants to sound entitled when we're sitting squarely in the six-figure territory for Bitcoin, guys, but still, it's a valid question. Okay, it does deserve an answer, okay? If the buys are coming in and Bitcoin is shaking off any of the misguided suggestions that it might just get switched off by Satoshi at some point and go to zero, then why the heck are we not at 150K or some BS like that yet? Why is the price been basically moving sideways for months now, even if it's pumping a little bit in the last 24 hours? Well, there are actually plenty of good reasons for recent price action and no cause for concern as long as you are a patient Bitcoiner. You're patient, right? You can wait. You have a low time preference. No, you don't. You want to pump now, I know. So let's break down what's happening. Firstly, you have to understand sideways movement, aka massive consolidation periods, are totally normal and healthy for Bitcoin because Bitcoin only gets, media attention when it's either in absolute rocket fuel mood, putting in all-time highs, or plummeting after some kind of crypto market catastrophe. Consolidation doesn't get people very excited, but it's a great time for buyers. If you weren't usually paying attention, you might get the impression it only ever moves in a vertical direction, either straight up or straight down, when actually, in reality, the vast majority of its time is spent in massive consolidation periods, approximately moving sideways. Bitcoin does have a history of being extremely volatile. That alone isn't an accurate picture, though, of what really is going on with Bitcoin. As you can see, if you look at this chart here from CryptoCon, it shows that Bitcoin's price action is actually characterized by short, explosive bursts to the upside. Those are the rallies that grab all of the media attention when most people come in to buy at the exact wrong damn time, followed by much longer spells when it basically turns tiringly crab-like. When nothing is happening, you watch the grass grow is more exciting than Bitcoin half the time. In fact, the periods of upward movement take only 30 to 40 days on average, and the most explosive parts, when the new highs are claimed, only take 3, 4, 5 days. Okay, just big pumps up, slow moves to the side. The sideways grinds, they last anywhere from 42 days in Bitcoin's earlier era right up to 238 days last year. It can be brutal sometimes. Our current sideways shuffle is now around 200 days, which is a big range, okay? But essentially we've been in a range from 75 to 110K for a long time now. So what I'm saying is that the current situation is far from unusual. In fact, it's pretty normal for Bitcoin, and it would be entirely within character for Bitcoin to hit another short explosive window when this period resolves itself. Is that coming tomorrow? Is that coming today? Is it coming next week, next month? I don't know, but it is coming. It's almost like the market has to wear you down before it just smacks you with the next parabolic move right in the face like a big fat frozen fish, man. But let's consider another question. Why don't the damn ETFs inflows immediately impact the price of Bitcoin? All this money's flooding into Bitcoin. Surely it should be pumping the price to the moon. I got an answer for that, but in a second. Guys, if you're trading the cryptocurrency markets, you need to get yourself an account over on BitUnix. It's the hot spot to be trading your hot crypto coins. You want to trade Bitcoin, trade Ethereum, you want to trade Solana, dog coins, cat coins, whatever you want to trade. They got you covered, man. Deep liquidity, long the rips, short the dips, on leverage, spot altcoins, all the stuff we want to guys be trading with over there. Plus, there's no KYC, meaning that you can trade with freedom. Big deal in today's world. So anywhere you are in the world, anywhere you might be in the world, you can trade on BitUnix. Pretty awesome. Plus, when you use the link down below, you're going to get a $400 deposit bonus. If you deposit $1,000, you get $200 back. You deposit $2,000, you get $400 cash money back in your account. That's crazy stuff, man. Plus, up to $9,000 in trading bonuses. The more you trade, the more money you get. The $9,000 is not a crazy achievement for people who do a lot of trading. So that's cash money back in your account as well. Check it out. Links right down here. Go get it. Okay, back to the ETF question. Look, it's an important question considering how wildly successful the Bitcoin ETFs have been, basically most successful ETFs ever. And it was addressed recently by Fundstrat's Tom Lee, who explained in an interview that the ETFs may be receiving in-kind exchange, meaning that some users are actually exchanging their coin holdings, so they're selling their real spot Bitcoin, and then they're buying an ETF for safety reasons or whatever it might be. A swap that essentially does not affect the price. But then he brings up a critical second point that tends to get very much overlooked, which is that there are some very, very long-term hodlers. People who have been in Bitcoin since like $10, $100, $500, people who have extreme profits. Think about if you bought Bitcoin for $100 or less, man. Think about that. The money you'd be sitting on right now, you could put it in $1,000, get $1 million right now. That's crazy. For this cohort who might have some pretty sizable stacks, $100,000, man, they're taking some money off the table. Another 10x, yeah, great. Get to $1 million, sure. But basically these holders are in so much profit, it doesn't really matter to them now whether Bitcoin doubles or triples or even hits $1 million. It makes sense for them to realize at least some of their gains when they may have been holding for over a decade at this point, realizing unbelievable gains. I mean, if that were you, wouldn't you be taking a little bit of money off the table? Take a nice vacation or something, man. People are allowed to sell, and that's a big win. Plus, and this is just my thinking on it, but there may even be an ideological angle. BTC has hit the mainstream, gone beyond its cyberpunk roots, is now being sold in wrappers owned by BlackRock. Now, I'm not saying any of that's necessarily a bad thing. Maybe it's all just part of the process was always meant to happen. If you want hyper-Bitcoinization and Bitcoin to take over the world, this is kind of part of that. But it's also easy to see how somebody who's been sitting there patiently on the sidelines, sitting in huge profit, might feel like, you know what? It's not the way I saw it all going. BlackRock's now the big player in BTC. Fuck this shit. I'm going to take some money off the table, you know? That also means at the same time, though, there's also a new type of buyer in town. And here we're talking about institutional players. We're talking about freaking states. Texas is buying Bitcoin, man. Sovereign wealth funds. Abu Dhabi's got $500 million. They're going to buy more. Investors who can allocate on a whole different scale to retail buyers, but also have more patience and who haven't yet secured their portion of what they see as gold 2.0. They're coming in. So those OG holders that I mentioned have a deep well of demand liquidity into which they can sell. And a lot of that also happens on OTC desks, which doesn't immediately spike the on-exchange prices. These new buys are very sticky. They aren't short-term traders looking to skim a quick profit, and they aren't likely to get shaken out by volatility, which you already have proof from. If you look at BlackRock ETF Bitcoin holders, regular people who are buying this, funds, institutions, whatever, they don't tend to panic sell very much. They just buy, which as a result means long-term, we can actually see less volatility in Bitcoin. So then what we're seeing around the symbolic six-figure mark is a prolonged churn from old hands to new hands that's taken a bit of time to play out. Okay, we've literally seen hundreds of thousands of Bitcoin changing hands over the last few months. We have that on-chain data. But ultimately, this should provide us with a solid support base for future moves up after Bitcoin is done repricing at this new level. So overall then, we need to recognize here that Bitcoin, our baby's growing up, guys. It's becoming a macro asset. So proud of it. So proud of it. Look, after all here, we're talking about an asset, magic internet money that has a $2 trillion market cap and is going to 10x and go to 20 trillion and rival the market cap of gold. We're approaching about 7% of supply currently in ETFs, about 4% held in public companies, which is likely to astronomically go up higher. Mainly MicroStrategy, but corporate adoption is just getting started. Similar Scientific, Metaplanet, and dozens of other companies are coming in, which is a big contrast to much of the rest of crypto. By which I mean that crypto tends to have a very short meme coin fried attention span, okay? So this new buyer, the institutional money coming in, man, it's changing the game. So when you're flipping your latest Let's Bonk shitter, you might be zoomed in on the 5-minute chart and seeing it drop 90% going, why is crypto so effed up? But then Bitcoiners are out here like, yo, we're over six figures, man, have been for weeks on end. That's an asset people are thinking about on a quarterly, annual, or even decades-long scale. I'm holding my Bitcoin till it gets $2 million. I can wait another 10 years. I'm not in a rush. I mean, you've got Michael Saylor out here making price predictions for 20F and 46, okay? And that expanded time scale is relevant also when thinking about big Bitcoin announcements. So if you hear about the plans for banks to lend against crypto for mortgages, that is massively impactful, but it doesn't happen overnight. Or frameworks for Bitcoin reserves for countries, man, massively impactful. It doesn't happen overnight. You might think price should immediately pump on this kind of news, but these are developments involving governments and traditional finance and very conservative, slow-moving organizations. The fact that they're even doing this in itself is a massive thing, but it takes time to play out. That all said, the newer parties interested in Bitcoin may be changing, okay? But one thing stays the same is the core message that got BTC to where it is right now, and that remains as relevant as ever. We've literally been saying it on the channel for years. That is to stack sats and chill. Thanks for watching.